Alright, this trade was absolute dookie, but I was 5 stories underneath the ground in a ramen shop with horrible Wi-Fi, so let's just break this down. Here's video evidence of that happening. It was bussin'. So as with any trade idea, the first thing that we need to look for is a bias. Are we bullish or bearish? And I determine that using order flow and candlestick logic. Clearly, we have been in daily bullish order flow. Fair value gaps are pointing higher. Now, candlestick logic-wise, since we don't have fair value gaps to work with here, I'm going to use individual candles. So over here on the daily, we are sweeping previous day's low. If we are bullish and want to go higher, we could sweep previous day's low to seek previous day's high, which is beautifully as well these equal highs up there. Now, those previous day's highs up there wasn't my draw on liquidity. I didn't think we'd get there today. My draw on liquidity today was Asia and London highs, which you can see marked out right here on the 4-hour. And you can get a clear picture of how price is respecting that previous day's low right there. We have a beautiful, super strong 4-hour rejection candle or respect candle with this large lower rejection wick. Remember, higher time frame wicks are lower time frame for value gap. So this right here in a lower time frame is bullish order flow. We expect this next candle to what? To expand higher. Towards where? Towards these next discount arrays in the form of those swing highs. And here we are on the 15-minute. Again, you can see a clear picture of everything that's going on. Sweeping previous day's low, a beautiful 15-minute respect candle, beautiful rejection, beautiful lower wick, and these are those London highs, Asia highs unmitigated right there, serving as a really clear and obvious strong liquidity for today's AM session. That's what I wanted to trade up towards to after we swept this sell side liquidity right here in the form of that previous day's low. So now we have a bias, bullish. We have a narrative. If we're going higher, we're from that sell side right here, and we are within time. We have the kill zone on our side. We're on the New York AM session. That is what that gray box is right there. The last step is an entry inside of that kill zone. So this is where I dive into the lower time frame right here inside that lower wick after we sweep sell side. So as I was saying earlier, I had absolute dookie Wi-Fi at the ramen place I was eating and trading at. So the original plan was to market by the IFVG right here once we inverse this 1 minute fair value gap, which would have been at this candle, which would have been so nice. The RR would have been way better. I wouldn't have had to hold so long through this disgusting chop, but that wasn't the case. The internet took so long as I was loading into my broker. So I ended up market buying this candle right here. I modified my stop loss. Of course, I'm not going to put it below the FVG. I put it below the swing low that created that expansion. And then I targeted a static 2R. And this is what that looked like. Here's the absolute abysmal creature that this trade was right here. As you can see, it's not a pretty one. It's not a nice look. But there's a reason for that. That was the weaker asset that I traded. And again, I couldn't go back and forth between ES and NQ like I typically do. So I just settled for NASDAQ because this is what ES was doing. Clear SMT on the lows, clearly the stronger asset. And it reached its drawn liquidity over there at London highs much sooner and it had a way better entry on the lower time frame. So if this was the one you took, good job. Anyways, hope you found that insightful. Follow for more daily breakdowns like these.